the deficit beyond 2030. If these big mines like Next Gen's Arrow doesn't come on in 2030, 2031, the market just has that much bigger a deficit. So we're no longer worried about too much production too soon. I think the concern is, are we going to have enough production coming online soon enough?
Hello, everyone, and welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and before I announce my guest, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products, or services. Always do your due diligence and consult with your financial advisor. And my guest today is Scott Melbye, a uranium and nuclear energy veteran with more than 40 years of experience in the industry, CEO of Uranium Royalty Corp, and president of the Uranium Producers of America. Scott, welcome to the show. It is great to have you back.
Luciana, it's a pleasure to be on your program, and now more than ever, exciting times. I don't know where to start, but if you're a uranium investor, this is the moment you've been waiting for. So we're very, very pleased to be firing on all cylinders.
Couldn't agree more. Excellent time to be a uranium investor, definitely. So let's maybe touch on the general uranium market. How are things going for, let's say, new uranium investors who are considering entering the space? How would you assess the current state of the uranium market, and what are the key drivers, let's say, behind the recent price trends as we saw price moved on the spot side, etc.?
Yeah, no, it's an excellent question, because it might be the reaction of some investors that, oh, well, maybe I've missed the timing, I've missed the boat. Not by any means. I mean, I think we're in the first or second inning of a 9-inning game here in terms of where the market is headed, and we've only recently seen the spot price reacting, coming off of those. It was kind of stuck at the $60-$70 a pound range, which is not a bad level, but it's not the level that's going to incentivize the mine development that we need around the world. That's changed now, coming off the WNA, and we have a number of buyers, including big financial buyers, are back in the market, like Sprott Physical, Uranium Trust, and Yellowcake. And that's good, because that's clearing off kind of the pounds of supply, whether it's Yellowcake depleting what Kazatomprom can put into the market, or and additionally buying more off the market. I think they raised more money than they need for the Kazatomprom option, but Sprott also cleaning up pounds over the last few weeks. And of course, I always come back to it. That can't be the driver. That can't be the only catalyst. Ultimately, it lands on utility demand and purchasing. And I think they're in an interesting position right now where they know things are going higher. The market's getting tighter. The World Nuclear Association supply and demand report indicated that the base case now for nuclear growth is a doubling of nuclear power by 2045. I can tell you we're not doubling uranium mines at the pace that we're going right now. And if we triple or quadruple, like President Trump's setting out as a goal for the United States, it's a lot of new mine development, new conversion, and new enrichment capacity that needs to be brought on. And I think the utilities realize this. I think to the largest extent, if they can exercise upward flex on their contracts, maybe pull from inventory, if they're able to sign new long-term contracts, there's not much left available in the near term. There's really a game of musical chairs going on right now, where the existing mine production is becoming fully committed. And if we truly are in a supply deficit, like we are, we're consuming about 50 million pounds more than we're producing this year and next. That's a significant deficit today. It goes to 1.7 billion through 2045. That's got to show up. And I think what will happen is, when the available mine supply is getting largely committed, utilities don't have any other choice but then to go to the spot market to buy and hold for their own needs. And that market, as you know, is not deep enough to handle that kind of volume. So we're kind of in that phase now. As you know, uranium enrichment and uranium conversion prices, have been, at all-time highs, and we were wondering, well, when is uranium going to follow? I think we're seeing that now, and I fully expect, and a number of analysts expect prices exceeding $100 a pound in 2026. I've been maintaining that for some time, even during the slow periods at the start of the year. So all the right things are happening in the market, and we need significant new mine supply coming on in the next 5 to 10 years, and that's where Uranium Royalty has been very active, meeting with potential projects, developers, and seeing where these pounds going to come from. And it's remarkably little in the pipeline, but we're engaged with those that are actively trying to fill that gap.
Excellent point, Scott. Let's stop a bit on the utilities. People are asking, and that's a legit question, are the utilities fully aware of the supply deficit that is here to stay for a very, very long time? Are they, I know we can't talk this in a general way. There are utilities on this side, on the left side, on the right side, and they are probably not thinking in the same way. But ever, how is the general consensus here?
Yeah, and you're absolutely right. There are some utilities that are very strategic and, have been addressing this tightening and this supply squeeze for some time. If they've been contracting long term over the last 5 years, they're very fortunate. They've locked in supply and they've got prices that are really attractive. Others, haven't, either just philosophically more uncovered, or not as concerned, or maybe distracted by other issues at their utilities. Certainly, there was a lot of focus on conversion enrichment, and the feeling was, well, uranium is a global market. There's lots of choices. I think when they come to the market and they see the choices are getting fewer and fewer, and I think they do realize it, but declaring that there's a problem is not going to help. The utilities want, the last thing they want is to kind of help spur on a panic in the market, and so they're going to pretend that everything's fine. But they, I think going forward, we're very near to a place where, let's face it, if you were a utility fuel buyer in the last 5 or 6 years, you could fall out of your chair and achieve very low procurement prices. And a lot of their contracts, let's not forget, even if they have to sign higher price contracts going forward, that's going to be blended in with the contracts that they've signed in the past cycle, and their overall fuel costs, are going to be impacted, but not that much, frankly. And as you know, uranium as a component of generating cost is quite low. So, we can absorb higher prices, and it would be in the utilities' interest to see these higher prices, because that's what's going to stimulate the new mine development. And, the cure to high prices is high prices. And I think, markets do work. The problem is our market is in quite a deficit and quite a hole that it has to dig itself out of. And now demand is increasing faster than new mine supply. But by and large, they understand it. I think you're going to get to a point where having supply locked in with a bona fide, viable producer, either through contracting or even ownership offtake going forward, is going to become more important than chasing the last 25 cents or $1 per pound in the price. We are getting to a point, and I think, does that mean we have consumers of uranium investing in fuel cycle? Maybe. I mean, if that's one way to assure that you're going to be secured your supplies. The hyperscalers are now coming into our business and acquiring nuclear generation or funding the development of small modular advanced reactors. They're not going to go to that extent of kind of buying electricity and acquiring and producing electricity kind of behind the meter for their own use, than to just fall vulnerable to the fuel cycle going forward. So I think the time is coming where we'll see investment coming from the Amazons, Microsofts, Googles. We're already having discussions with some of their infrastructure people, they realize that that's something that may need to be done going forward.
Yeah, a lot of good news for uranium comes from the US, but the US is still heavily reliant on Russian uranium today. So my question to you is is it possible that the US stops being reliable on Russian uranium in this decade? Is that possible?
Oh, well, we're by
Fully, I
law.
mean.
Yeah, I mean, by law, we're required to be off of Russian uranium by December 2027. That's when the ban fully kicks in and the waivers are exhausted. And so, in our planning time horizons, that's practically tomorrow. I thought it was interesting if you saw the clip of President Trump being interviewed on Air Force One last week, when a reporter rightfully asked him, uh, "President Trump, is it right for you to be demanding that Europe get off their reliance on Russian oil and gas when your utilities continue to buy Russian nuclear fuel from Rosatom?" And Trump turned to Secretary Burgum and said, "Secretary Burgum, is this really the case?" And Secretary Burgum uncomfortably said, "Yeah, we need to mine, maybe mine. We need to, do more." So I think it's interesting that, we assume that, President of the United States sees and knows everything, but I think he's finding out that we still have a reliance on Russia, at least for the next 2 years, but there's no interest in sort of the energy dominance program that we're under here to continue that, and I think we need to extend that to Chinese uranium as well. I think another thing to note was last week when Secretary Wright, Department of Energy Secretary Wright, spoke at the IAEA annual conference in Vienna. In his remarks, he expressed how important it is for the U.S. to grow its strategic uranium reserve as a way to ensure energy security and national security and have that stockpile built up, which was something that President Trump pursued and initiated in his first term. And I think I don't think the Secretary of Energy would kind of just throw that out there in a public prepared remarks if it wasn't something the administration is giving serious consideration. And I know in my role as Uranium Producers of America, this has been one of our biggest asks of the administration and Congress is to continue building that strategic reserve of American produced uranium conversion and enrichment. So stay tuned for that. That could be a good development in the coming weeks and months.
Okay, okay. When you mention strategic reserves, how are the Chinese and Russians approaching to their strategic reserves compared to America?
Yeah, no, they're especially I would give credit to the Chinese as being very forward thinking. They tend, as we say, the saying is that they play the 1,000-year game, and they're certainly doing that as the fastest growing nuclear energy program in the world. They're adding 5 or 6 reactors to the grid every year, and they're breaking ground on new construction. They'll surpass the U.S. as the largest program by 2030. But they, really look seriously at filling their uranium needs through 3 ways: through domestic mines in China, which unfortunately for them are just not that significant. So they fall on the latter two prongs of the approach, which is import of uranium into Shanghai, the port of Shanghai, or the Alashanko border crossing from Kazakhstan. And that route has been pretty prolific. I mean, they could have as much as 500 million pounds in inventory for their needs as a result of that. Why is that important? That inventory is at their facilities, cannot be stopped by sanctions or trade actions by the UK, Europe, or the United States. So that's very important to them. So they've built their strategic reserve. They also are making direct investments in mines in foreign countries, like countries in Africa and Namibia, in Kazakhstan, very significant investments to try to lock up the 50% of uranium that Russia isn't already controlling. They want to lock up as much as they can of the other 50% and are well on their way to doing that. So they're taking a very long game. And I remind policymakers in Washington and the Trump administration that we're in. I mean, you don't have to call it a resource war. You can just call it a global competition for critical minerals and uranium, which is, in President Trump's eyes, a critical mineral. And we better, pick up our game. Good news is, bad news is from our perspective, Kazakhstan, which produced 40% of production globally, is going to fall to Russia and China. They just have the geographic and geopolitical advantages there. But the good news, we have countries like Canada and the United States in the West, which are highly underdeveloped. I think Australia would fall in the same camp. And so the good news is we do have resources in those countries, and we're not mining as much of those resources as we could and should be. And hence, uranium royalty, we're very eager to expand our exposure in Australia, in Africa, in those countries where they haven't, completely gone over to the Chinese side. There's a lot of opportunities for us there, and certainly Canada and the United States. U.S. production should increase dramatically. It already, I think we're now in a recovery phase for the industry where you're going to see quarter by quarter the production levels just steadily increasing. That's certainly going to be the case with Uranium Energy Corp, with its developments, its operating mine in Wyoming and mine to be started up here in South Texas in November. I think Canada, if Saskatchewan isn't tripling its production in the next 10 years, there's something wrong. So, going beyond we've always just relied on Cigar Lake and McArthur River, but I think you need to look to the next gens, the Paladins, Denisons, UEC's Rough Rider, as those next generation of mines, not just to be thought of as kind of replacements to Cigar Lake and McArthur, but I think they need to come on, sooner. I think now, not likely before 2030 in a big way, but the deficit beyond 2030, if these big mines like Next Gen's Arrow doesn't come on in 2030, 2031, the market just has that much bigger a deficit. So we're no longer worried about too much production too soon. I think the concern is, are we going to have enough production coming online soon enough?
Yeah, Canada could really jump in this equation, and I totally agree with that. However, do you think that there is too much cutting red tape over in Canada? There are a lot of projects that could be
Yeah,
done much
they
faster.
need. Yeah, Lucian, we absolutely, we view Canada as a country that could be doing more and doing, moving faster on the permitting and licensing. I think the Carney government, when they were campaigning, indicated that they could try to kind of combine the provincial and federal licensing as a way to speed up. But now that they're in power, we don't see them taking those steps. So I think, some of these big important mines will be very important to the mix and are important to the global industry. But I think 2030 onward is probably the timing of those coming in. In the United States, we're seeing the Trump administration take steps to fast track the permitting and licensing of new mines. We're in the midst of seeing how effective that will be, but I can tell you it's very encouraging, the kind of support we're getting from Washington. If there are projects that you have in the United States that are held up by federal action or inaction, take them to the White House, to the Energy Dominance Council, to the Permitting Council, and they'll work to get your project on the transparency dashboard. They'll work to coordinate federal agencies to overlap on their reviews of projects, not be kind of stringing it out, not waiting for one agency to end before they start. So parallel licensing and permitting will be a big thing, and just holding them to deadlines. So that's what it looks like. If you want more critical and rare earth minerals faster, you need to speed up the permitting and licensing. But I think in the United States, we're on the right track, headed in the right direction.
Good points. Scott, can you comment on Niger? I know you established a connection with Global Atomic with royalty interest in DASA uranium project. How is the geopolitical security landscape in Niger as we speak?
Yeah, so just as a general comment, uranium royalty, as a capital provider to miners and developers anywhere in the world that they may be, we do have incredible perspective in being able to meet with those management teams, visit their mines, visit the countries, and really do the proper assessments. And I did visit Niger. I saw a first world mine being built in a third world country. So Global Atomic has done everything imaginable to keep that project on track and moving forward, and they should be commended for it. I think what they're waiting on now is really, the DFC financing from the U.S. government. Unfortunately, their process got cut up in a change of administration from one president to another. These agencies often go through a transition period, but we're hearing that the Trump administration, Secretary Rubio, is placing a high priority on American engagement in the Sahel region. And frankly, it's to counter inroads being made by Russian and Chinese interests in these countries. So I'm hearing that Global Atomic is encouraged by the process at DFC, but I think we're all waiting to see that happen, and we're interested in that project. But I think we have to wait until we see DFC's next step, and we're active in a number of countries throughout Africa as well. Some of the fastest growing projects in the world today happen to be in these African countries, and so we're engaged on all those fronts.
Excellent. Final question, Scott. UROY update. Do you have any plans to expand your royalty portfolio? What is your actually criteria guide for selection of new projects? Are you in a search on other jurisdictions as well? You mentioned some, however, can you expand a little bit on that?
Yeah, that's job number one for us. We're now up to 24 royalty interests. We added most recently the Forum project in Nunavut, Canada. But I would say that our pipeline of new business opportunities, has never been greater, with 5 or 6 kind of files on the go right now that we're engaged in at various levels with potential miners and developers. The criteria, every project's unique, but we'll run them through various screens of geopolitical risk, of ESG, and social responsibility. We certainly look at the geology. On our team, we have experienced a number of people that worked with me at Cameco, like Darcy Hirschhorn, who scrubs the geology of each project and ensures that the resources that they indicate are actually there. James Hatley, who was the mine engineer at Cigar Lake and McArthur River at Cameco, really looks at the mine plans and can they pull it out of the ground economically and be successful in the mine plan. So we approach each project uniquely. There's no sort of internal rate of return threshold that we apply to all projects. That's unique to each region and if it's I caution of saying that, if it's a sure thing, with near-term cash flow, nothing's a sure thing in mining. But if there are projects with near-term, reasonably assured cash flow and production, the rate of return will be lower than a project that faces still a number of development hurdles and maybe some geopolitical risks. But we're very encouraged. The world needs a lot of new mine production. even between now and 2030, we need mines developed in this period. It's not just 2030 onward. So the need for capital is quite large. Utilities can turn to equity markets, to debt, but we think with royalties and streams, we have a low cost alternative that's non-dilution. Doesn't come with all the strings and covenants that debt would bring. And so we're encouraged that we'll see those 24 royalties grow to much larger number in the coming months.
Excellent. That was Scott Melbye, CEO of Uranium Royalty Corp. Scott, thank you very much for joining me today.
Thank you, Lucian.